Hi, everybody. Thank you so much for joining. This is our second Market Live over a non-farm payrolls report, and this will be a really interesting one. It's been a super interesting week for financial markets. Yet again, we've had earnings data, we've had Donald Trump and his tariffs, the de-escalation and the escalation, and now, of course, we've got payrolls. Now, the key number to remember is 175,000. Now, that is what analysts are expecting, but I'm hearing a whisper number on the street of 215,000. So that's a hotter than expected. Now, this month is extra special for payrolls because every January we get the Bureau of Labor Statistics revisions. Now, that's from April 2023 to March 2024. Now, that may seem like a really long time ago, but actually it is really relevant because it will tell us whether or not we would say you could categorize the US labor market as being quite hot and being quite strong. And that is why the Federal Reserve has really slowed down expectations for rate cuts, with just over one rate cut priced in for the Fed this year. So these revisions to payrolls and to the unemployment rate will be really important to see if the labor market is as strong as we think it is. Now, we got the preliminary reading in August, if you can remember that far back. Back in August, a lot of volatility after that payrolls report because this revisions number was over 800,000 lower. So revisions tend to be lower every year, interestingly enough, and we could see an increase in the unemployment rate as well for that whole period. If that happens, and that will be really, really interesting to see what the market reaction is. It could be quite confusing where we get a very strong number for payrolls and then a weaker revisions number. So that is something to point out as well. Now, I'm just going to share some of my screens with you. So just bear with me, guys, because I just want to show you what is going on with markets as we wait. So I'm just sharing now. You should be able to see this. This is just the data that we're waiting. I will come back to this, but I just want to show you this is just a daily chart of the dollar index. So the dollar against the US's largest trading partners, fairly strong there, just backing off the edge, but it is higher on the day. If we just look at this on a longer time frame, so on an annual time frame, just bear with us there. Dollar's still strong, but it is consolidating sideways and has been trading in a range since the start of this year. Let's look at dollar yen. That is very, very high as well. So the yen, the dollar catching a bit of a bid leading up to this, no doubt on that rumor number. Now, this is the S&P 500 E-minis. They are absolutely flat pretty much on the day. So just turning higher there. They have been weaker earlier on, but they are just turning higher now, so above that 6,100 level. And then let's look at gold, because I know a lot of you like gold as well. And gold is pretty much trading sideways, up about $5. It had been as high as 2,866 earlier today, but gold is still trading with a strong bid, as it has been all week. That's not just to do with payrolls, actually. That's also to do with trade tariff fears and fears that tariffs could actually be levied on precious metals, which is leading to a flurry of people wanting to bring gold back onshore. So you may have read about that. It's a very, very interesting dynamic. And let's look at what the pound and the euro are doing as well. I'll just bring those up for you now quickly ahead of this, and then we'll go back to that screen to make sure that we don't miss out on what that data is. Yeah, so as you can see, as I said, euro is falling because the dollar is catching a bid, and likewise for the pound, although the pound has been interesting and very, very volatile in the last few days. Now, this is cable. It's actually managing to hold its own against the pound and is one of the better performers today. And what you can see here, back above 124, 124.50-ish there. Remember, this had been below 124. It fell to 123.5 yesterday on the back of that Bank of England meeting. So that's really, really interesting. Now, let's get back to that economic data because I don't want us to miss anything. So we're looking for 175K is what analysts are saying, but I'm hearing 215K, but that's just a whisper number. So that doesn't actually mean anything. We're also looking at payrolls, the revisions to that data. We're looking at the unemployment rate, which was 4.1% in December, is expected to remain at 4.1% in January, and then average hourly earnings to tick down a notch to 3.8% from 3.9. We've got about 30 seconds until the report, and if we just look there, yes, I'm going back to the E-minis because the reason why I'm looking at E-minis so closely is that last August, when we got these revisions, the stock markets in the US really fell sharply. The S&P 500 fell over 1% versus, as opposed to after the August reading. So worth watching. This could have a big impact. Now we're on the countdown. Let's watch it because it's coming out any second now. 143, so weaker than expected. Unemployment rate down though at 4%, and we're seeing a 4.1%, so a big tick higher there in average hourly earnings, a tick lower in the unemployment rate, which is 4%, and then 143,000 for those January payrolls. But look at this number over here, the one that I'm circling, as you can see. Let me just go back to that number. Basically, that is a bigger than expected revision, a big upside revision there to December, 307K versus 256K. So that cancels out a little bit. So I think this is a very mixed report. And I'm just going to look at some of the establishment data headlines as well. Oh, not there. Yeah, so we saw a big increase in average hourly earnings of 0.5%. Let's see what the market is doing. Let's see what the dollar index is doing right now. Dollar index has been mostly unchanged. The market doesn't know how to accept this report, really. Dollar yen is probably a clearer view. So we've been a bit whipsawy. So we fell initially on the back of that number. Then when we looked at the revisions, when we looked at the unemployment rate as well at 4%, now we're moving a little bit higher. I wouldn't say this is a huge move on the back of this. I would say that this is quite moderate. The market is really not quite understanding what to do. And as you can see, E-minis down a touch, because I think overall the market is saying this is the headline number for payrolls at 146, might be a little bit weaker than expected, but the other details in the report are very strong, particularly wage data. If wage data is that strong, then how can the Federal Reserve hike interest rates? So as you can see here, wage data rose 0.5% on the month, 4.1% annually. I'm just going to take a look at interest rate expectations, and I want you to look at December at 3.9%. Now that has barely shifted at all. So the market is not really knowing how to respond to this report. This shows you the exact movement. This is why it's this is the dollar yen chart, and it shows you the exact movement during this payrolls report, on the back of this payrolls report. Now, as you can see, the market doesn't know what to do with itself. So it's very whipsawy around payrolls. It can be, some people prefer to wait for the dust to settle, but as you can see, we took a big sharp drop lower. We've since moved higher. So we went to 151.40, so we nearly dropped 100 pips, but we're now recouping that loss and we're back higher again, trading around about 152.20. So towards the highs of the day for dollar yen. Let's check in a little bit more with dollar index here. Dollar index, again, overall the market isn't moving too much. And I'll take another look. Yeah, we're extending the decline there for the S&P 500. Again, I wouldn't say this is the biggest move, but we are below 6,100 in the S&P. This is the E-minis, because remember, US markets aren't open for another hour. So we've seen a bit of a hotter than expected jobs report, and that really is weighing a little bit on risk sentiment, pushing up the dollar. Let's take a look at bond yields as well. These were always really interesting to watch. You see that, as you can see there, yes, quite a hawkish response in the bond market, up 5 basis points for US 10-year treasuries. Let's take a look at 2 years. This will give us a clearer reading on what the Fed and what the outcome of the Fed. As you can see there, 4 basis points higher for the United States 2-year treasury yield. That's what I'm pointing at there with the Bloomberg finger. And that is high. Now, bond yields are up across the board, but that certainly is higher than what we're seeing elsewhere. So I'm reading this as a fairly hot jobs report, even though the headline number was weaker. So just to go back to that, sorry, 143. I think I said 146 earlier. It's 143. But the reason why it's hotter, 307K revision for December. Oh, apologies for that. Let's go back to our we've also got a big increase in average hourly earnings, 4.1%, and also the unemployment rate ticked lower to 4%. So kind of in line. I'm still just checking to see if there's any news on the revisions. I'm not quite seeing that yet, so I will keep us up to date on that. But what does this essentially mean? What was quite interesting is that we had seen, now those of you who read my note earlier will know that when I said this, by the way, I'm just holding this page on dollar yen, just so you can see what's kind of going on. I mean, essentially it's net neutral at this moment, but earlier today, I had sent out my preview note early this morning, and we looked at all those lead indicators for unemployment. So what we noticed was job openings in the US had fallen. However, the ISM Services and Manufacturing Survey for January both posted higher than expected employment sub-index readings. Now that's really important because they're considered lead indicators. So that's really worth watching there as well, because what that essentially means is that there is still hiring activity going on. 143,000 though, that is a bit of a line in the sand, and that's why we're seeing the market doesn't know how to respond to this report, because to be in full employment, you essentially need to have 150,000 jobs growth each month. Now 143 is very close to that level. I don't think that the market is going to be that picky about this jobs data, but it is something to worth watching about, because the JOLTS job openings, they had fallen very sharply. They went from 8.3 million in November to 7.5 million in December. There's a bit of a lagging report, but it obviously doesn't suggest that people are being laid off in any way, because the unemployment rate is actually ticked lower at the start of this year. So that's definitely something to watch. Now I'm just checking these revisions as well, just to see how we're going. Now I'm going to stop sharing and I will come back to you so you can see. This is the aftermath of the Non Farm Payrolls report. Let's take a quick look at what is going on, because I am obviously very interested in what's going on with those revisions, and I do want to find out what they mean. Now, we did have a delay in these in August, but the market is definitely waiting for what these, they will definitely be waiting for what this means. The other thing to point out, I think, is the public sector employment. That is something worth watching. So that rose by 32,000 in January, and there's been an average monthly gain of public sector employment in the US of 38,000. Now, this is really interesting because obviously Donald Trump is going in and trying to slash the public sector, so those numbers could fall. I think this report overall affirms like the Fed being a bit on hold right now. There were upward revisions for November and December of last year, and then the overall annual revisions, well, you're going to have to wait for my note for that, I'm afraid. I cannot see that as yet, so it looks like that hasn't been released as yet. Let's see where we're going. I'll share one last time with you before I leave you, because I'm sure you want to see the market reaction rather than me. And just bear with me, guys, one moment. I will go back to sharing my screens with you. But yeah, as you can see, a little bit lower in dollar yen, but not much. Let's check in on that dollar index. I mean, barely moving at all. We can just take a look at euro there as well. Here we go again. It's just a mirror reaction really of what's going on with dollar yen, but we're still trading around about that 103.70 mark in euros, so not too interesting, trading towards the lows of the day as the dollar keeps its bid. And then we've got pound. The pound again, touch lower on the day, 124.43 trading now. I just want to take a look again at this interest rate expectations. Now it's barely moving at all. I don't see the market making a big movement. There's a smidge higher in where they're expecting interest rates to end the year, but if we look along here, we are still expecting, about 1.5, just over 1.5 interest rate cuts for the US this year. So I don't think that this report changes the dial for the Federal Reserve at all. Let's look at those E-minis as well. So a bit lower on the day, but to be honest, nothing particularly fanciful. Let's take a look as well at the global equity indices. I think that's worth watching. As you can see here, the ones that are live are Europe. So that's number 2. Euro stocks, they're all lower, as you can see. So a bit of a negative bid there because the Federal Reserve probably aren't going to be shifting their dial anytime soon. We're looking at bonds here. As I said, yes, US bonds slightly higher there. And then let's also look at the commodity space, because I know you guys are big commodity fans. And as we can see, a little bit higher on the day for crude, and oil as well is higher on the day too, but not by much, even though that average hourly earnings are picking up. But this is, let me look at it. I'll just show you how we've moved in the last 5 days. Here, so as you can see, we're actually lower in oil in the last 5 days. We've seen a real bias towards gold and silver at the bottom here, where I'm kind of pointing to. So a 2.4% gain for gold, 3.3% gain for for 3% gain for silver. But I actually think this is not too bad news actually for oil. It suggests that the US labor market remains strong and solid. Just that headline number at 143K is really the problem there. But let's go back quickly to dollar yen before I leave you. So we are extending a little bit on the downside here. Let me just double check to see if we have any, not there, sorry, any headlines. Oh, interesting. So let's hold on if you can for a little bit longer, because we can see the 2024 average monthly gain revised to 166K from 186K. So those revisions were to the downside, as I mentioned. We were expecting downward revisions from the BLS, the Bureau of Labor Statistics, so downside revisions. So that is why the dollar is coming off now. So again, this was a real two-part piece, and that was released a little bit after the overall report. So as the dollar is ticking lower, that's as these details come in about the revisions. So as you can see, a bit of a dip there. We've gone below 152 in dollar yen. Still higher on the day, we would say, but we have just knocked off that one, just been dipped below that 152 level. Overall, though, I think 168K, yes, it's lower than the one. Let me just get the exact figures for you. Apologies for that. 166K from 186K. Yes, that is lower than had previously been thought, not by a huge amount, and it's crucially above that 150 level, which is full employment for the US. So I still think that the US that the US labor market looks quite constructive. It is a little softer than expected, though, and I think it's that what's going to be really interesting is what that overall number means, and we can go in and just have a quick look at what has driven that before we all go. Let's just bear with us. We're going to pull that up. As you can see, so we have seen a dip lower. One of the lowest readings since, well, that October was a big mess. Now, the one thing we would point out is that the fires in Los Angeles could have impacted these figures, but the largest growth is in the green sectors. That's education and the health sector and the health services. That has been increasing quite a lot. So very much service sector employment here. Government jobs were higher as well. Now, that's the risk. They could be all chopped under Donald Trump. But what we haven't seen is any big changes in professional and business services. They're pretty much not hiring at all. So really, really interesting. Could be some way down to uncertainty about things like tariffs and things like that. Now, that could have kept hiring on hold for January. It'd be interesting to see what that means. We haven't necessarily, 1 month's job data is not going to change everything for the Fed or for anybody, really. I'm just going to come off of sharing my screen if that's it, guys, before I say goodbye. But I do want to say yes. So I think this is a really mixed report. Revisions were noticeably softer than expected, but still above that 150 level. The overall headline number was weaker, but then we got a stronger unemployment rate. We got stronger average wage data. So very hard to read. Slight softening in the dollar on the back of that revisions data. And we haven't yet seen any big movement in financial markets. I think they're still trying to digest what all this means, but definitely a calming in the labor market, a slowdown in jobs growth for January. Be interesting to see whether or not that was impacted by the fires in Los Angeles, and we'll be keeping an eye on it. Right now, there hasn't been that really big impact on financial markets like we saw in August, but I think there's lots of other things going on. So there still could be a lot of volatility in financial markets. I still think this is good news for commodities as well. And I think it will keep the dollar supported, as we've seen with that rise in bond yields. But that's it for now. Thank you guys so much for joining. We really appreciate it. One of our commentators here said the economy is still hot. I think you're probably right, but we will have to see how that progresses throughout the rest of this month. So thank you very much, everybody, and we will hopefully see you soon. Thank you.